The four horsemen of big tech reported earnings this week.
Thank you, everyone. We are the four horsemen.
Good night.
Good night.
If those four are Facebook, Apple, Microsoft, and Google, then what about Tesla?
Well, Tesla is a small horseman, maybe in a couple years. But hey, don't worry. We will cover baby horsemen too.
Let's start off with the announcement from the Fed.
I don't know about you, but I heard a lot of doves flying. Powell said he will keep short-term interest rates unchanged, so near zero.
And not only that, the US central bank will continue to purchase 120 billions of bonds each month.
Powell also said the economy is growing faster and inflation is going higher.
Yep, as long as the printers keep printing and the rates remains low, I don't see any big drop in the stock market.
Speaking of the market, let's go over some updates and key levels.
Both Nasdaq and S&P 500 retraced from the recent all-time high despite FAAMG, minus Netflix, crushed earning estimates.
And S&P 500 put in a record high again this week at 4218. It pulled back 0.7% to close this week. We might continue to see more downside next week though. First support level to keep your eyes on is 4115 to 4125.
Nasdaq also pinned a new high with fans blown out earnings.
Yeah, so here's something interesting. The indices are hitting all-time highs, but here we got data from Bank of America research saying retail clients have been the only buyers while hedge fund clients sold.
Wow, not only that, retail clients have been the net buyers for 8 straight weeks. Meanwhile, hedge funds have been selling 3 straight weeks.
I would be careful then. I have been reducing my purchases lately anyway. Thanks for the tip.
So what do you think about this earning for Tesla?
Overall, it's pretty flat for me. You got the numbers, right?
Well, Tesla reported record net income of $438 million for the quarter, as well as earning of 93 cents per share on 10.39 billion in revenue. Also slightly beat vehicle delivery by 100 vehicles.
Okay. So I saw that they have 10.38 billion in revenue, slightly below Q4 in 2020. How is their net income higher?
That must be the profit from the 10% Bitcoin they sold, right?
And they also hit record regulatory credits income of 518 million this quarter. Looks like they would be running negative without credit sale since their net income is 438 million.
And they would not have been positive in the past 5 quarters without the credits.
Sounds like we're bearish on Tesla.
But don't worry, we are actually not. We hold the bag just like a lot of you guys.
And when Tesla becomes net positive without the credit sale, it will be a boost for the share.
Let's get some positive notes going.
All right, so Tesla reported the best quarter for vehicle deliveries despite chip shortages. That's very impressive. Model 3 is the best-selling premium sedan in the world and aims to export Model Y and Model 3 to expand the European market from its factory in China later this year.
That's exciting news. And once Berlin Gigafactory is complete, they will be able to deliver even more cars in Europe. So in terms of entries, just be patient and wait for 400 and 500 areas.
Let's briefly talk about NXPI here.
Okay, so NXPI is basically an automotive semi-play.
That they pretty much matched the revenue estimate of 2.6 billion and beat the EPS 2.31 to 2.21.
So no surprise there. The company expects next quarter revenue to be 2.5 to 2.64 billions, and the market estimates the revenue to be around 2.57 billion.
So not much to talk about for this ER. One thing to note though, it's still highly overvalued. So if the market continues to give the semi-sector good valuation, this company will continue to hold up.
Microsoft share dropped 3% after reporting the biggest revenue growth since 2018 and poised to cross 2 trillion in market value.
Their profits jumped 44% to 15.5 billion and revenue rose to 41.7 billion for the quarter.
That's right, Microsoft's main revenue and operating income equally derives from productivity and business processes, intelligent cloud, and personal computing.
Over a year into the pandemic, Microsoft is still seeing strong growth in digital adoption as companies move to a work from home environment.
Not surprisingly, the pandemic sparked strong demand for Microsoft products, and I believe this is the beginning.
Yeah, I think so. Also, Microsoft Azure Cloud Computing is gaining grounds on Amazon AWS and grew 56% this quarter.
I think Microsoft Azure is attractive over AWS to a lot of corporation if they are already using Microsoft Suite. If you are looking to open a positions, it would be nice to grab some share around 230 to 240.
And next up, Google turned in a very nice Q1 earnings with 55.3 billion in revenue. That is year-over-year growth of 34%.
Nice, nice. There's really no complaint about Google. EPS of 26.29 compares to last Q1 EPS of 9.87. Not a small beat there. Operating margin grew 30% year over year as well.
Impressive. Google Cloud revenue grew almost 50% year over year from 2.7 billion to 4 billion. And YouTube ad revenue grew 50% as well from 4 billion to 6 billion. And they just won a 1 billion cloud computing contract from Univision.
Quickly to piggyback on YouTube revenue you mentioned, it is forecasted to match Netflix in annual revenue this year. Imagine they hit that and Netflix is still burning 17 billions on content.
No way. YouTube is making money while barely paying for content? There are some YouTube originals, but no one watches those. They're basically sharing profits with YouTubers.
So not much to pick on Google there. Probably the best report card this week, but let's look at the stock. It gapped up on Wednesday. Thursday and Friday together are flat from Wednesday's high. The market is definitely showing some fatigue. If you previously had Google from below 2000, you should keep holding, and anywhere between 2000 to 2200 is pretty safe, since they just announced a 50 billion shares buyback program this week.
And after Google, let's talk about Apple. They reported revenue of 89.6 billion, which is 54% growth year over year, and with diluted EPS of 1.4. And taking a look at their iPhones, Mac, and iPad sales, very impressive year over year. iPhone grew 65.5%, Mac grew 70%, and iPad grew 78.7%.
On top of those devices blowing expectation out of the water, China's sales grew 87% year over year. This tells me that Chinese economy is booming and we should expect strong sales revenue from other companies who conduct business in China as well.
One thing about Apple, though, they don't like to provide guidance. They haven't been providing them for a minute.
With a product as good as iPhone, I guess that's the compromise that we have to make if we want Apple.
Speaking of which, Apple has support around 130 with resistances at 135 to 137 from 140 to 145.
After talking about Apple, we have to talk about Facebook. CEO Mark Zuckerberg says Apple is now one of Facebook's biggest competitor.
Apple's recent privacy change in their iOS 14.5 update, it changed the game for Facebook to collect consumer data to efficiently deliver their ads.
You're right. The iOS update will not only impact their ad performance, but will hurt their ad revenue in the upcoming reporting quarters as business will seek alternative marketing channels.
Facebook's total ad revenue grew 46% year over year to 25.4 billion, which is one of the main drivers for this quarter's surging revenue at 26.2 billion, about a 48% growth year over year.
Wow, nearly all Facebook's revenue are from their advertising platform. So there are currently 113 million iPhone users. What if 50% of the users choose not to share their data from the new iOS update?
I think that'll be rough for Facebook, because the new Apple policy will limit businesses' ability to effectively reach and engage their potential audience with Facebook ads. Over time, small businesses may see an overall decrease in ad performance and increase in cost per action.
which means this will directly affect Facebook's profitability as their advertising platform won't be as effective as before.
But on the bright side, Facebook is putting more efforts to facilitate more sales of products and services on its own apps as a method of reducing its reliance on Apple.
Mark Zuckerberg expressed that Facebook will manage through the situation well. So if you are confident with the company, you can consider opening your position around 261 to 284 if the stock pulls back. Upper resistance is around 303 to 347.
Taking a look at the last main earning of this week, Amazon turned in $108.5 billion in revenue with 44% year-over-year growth.
They reported diluted EPS of 15.79 compared to 5.01 in Q1 of last year. That is 215% year-over-year growth.
And one of Bezos' baby, AWS, reported $13.5 billion in revenue with 32% year-over-year growth.
Even though this is not necessarily beneficial for the company income-wise, but Amazon spent more than $1 billion on raising wages for over 500,000 of its US operations workers. It can definitely help employees' morale and boost performance that way.
Yeah, coming from both of us who work in corporate, morale is very important. Amazon's other segment, which is mostly ads, posted a 77% jump in revenue to $6.9 billion.
That means more and more merchants are willing to pay for premium space on Amazon, which is awesome for the company.
And not only that, Amazon also hit 200 million Prime members. I know we're both Prime members. I'm sure a lot of our US viewers are also Prime members for free shipping and video streaming, of course.
Exactly. And Amazon invested heavily throughout the year by increasing capacity at warehouses, buying planes to speed up delivery, and adding hundreds of thousands of employees. That's going to result in wider selection of consumers and even shorter shipping times.
Awesome. We also have Q2 revenue guidance from 110 billion to 116 billion, beating the estimate of 108.5 billion. It is also expanding its virtual healthcare program and prescription drug business.
Amazon stock has gained about 45% in the last 12 months, and it has support around 3,300 to 3,380, and the next support is 3,000.
If you are a long-term investor, you can definitely sleep well investing in Amazon. It has great revenue generation channels and is absolutely a hold till retirement.
My first pick for the week is PINS. Pinterest stock was crashing by 11% after earnings. Revenue growth remains strong, and they still have a lot of room to increase monetization in their platform. Looking to open my next position around 60.5.
And for my first one, AMD reported great earning. I'm waiting between 74 to 77 to open my long-term position.
Another big gap down for Twitter after it reported increased quarterly revenue on the strength of ad sale, but missed on user expectation. I'm looking to open my position around $52.
NIO reported earnings this Thursday. It missed EPS estimates by a lot and narrowly missed vehicle deliveries, but beat revenue and achieved a 482% year-over-year growth. I'm currently holding NIO. I'm adding around 35 or below. I believe the resistance around $45 to $46 will need more time to be broken.
Thank you for watching. If you find this video helpful, feel free to give us a like and subscribe for more content like this.